The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are.
Hello everyone, this is the Redcliffe Investor, or Marquis. Today we're going to look over at BP, an oil company that has profited well from this 2021 and 2022 rise. So let's begin. Let's begin with a clear picture of valuation. The revenue growth has decreased by almost a little over 13.5%. To be exact, it's 13.65% from 5 years ago. Profit growth has rose about 18%. Profit margin has gone up almost a whole 100%. Gross margin is about almost 3/4, about 76.48, almost 76.5. Net income has grown. That's amazing how net income has grown by 116.44%. Their net margin has gone up almost a full 100% from where they were 5 years ago. Free cash flow has gone up a staggering 133.44%. That's amazing. So this is where I was wrong in my last 6 videos, is that price to free cash flow does not mean how well they can manage their free cash flow. It is another way of, similar to the PE ratio. The price of free cash flow is pretty much you take cash and compare it to cash. And how is it overvalued based off their free cash flow or overvalued? Hopefully I said undervalued and overvalued. But according to like a clear picture, BP is 53.68 times over their free cash flow. So they're super overvalued right now. They need to fall quite a bit. Because what happened in 2020, when in March, all the oil prices went to pretty much zero. Almost zero for some companies. They were negative. And they have been profitable since then. That giant crash we had in March of 2020. They've been riding a giant tidal wave of, I want to say, new investors. Oh, it's by BP, it's by PP, by Chevron, by Exxon, and it rose. They do have a good free cash flow yield, though. We do like that. They just barely made the cut. But however, we take the free cash flow and you take the total debt. It'll take them 42 years, almost 43 years to pay off all their debt with their free cash flow they have now. But look at how many shares are outstanding. It's at 1852. Or if you take, let's say, that'd be roughly 1,852 would be roughly 1.8 billion shares outstanding. So they're diluting your holding by 9.14%. Ouch. That hurts. Then here's all the returns. So the return on invested capital is how well they can handle all the capital they have and reinvest it back into the company. They are doing a meager 2.28%. The return on equity is negative 0.08%. They do not know how to manage their equity to get a return. Alright, before we look at my discount cash flow model that Jacob Orrs has provided for all of us, if you go on his channel, and I will leave a link or probably a video to that channel or to that video over him where he is explaining how he made the discount cash flow model. So we see that analysts are saying so we have 32 analysts. It's saying a high of $54.96 with an average of $37.69 and a low of $28.32. But they're saying it's a buy. My discount cash flow model says it should be negative 63. That's cash and cash equivalents. That's our total debt. If this is correct, this is our cash flow from operations. Here, expenditures, net income, free cash flow. I got it from here. I got the financials. And they get it from. See down here, the NASDAQ data link sourced from 10Ks and 10Qs from the SEC. But somehow, my discount cash flow model that Jacob Morrison built is saying that this company stay away from, it needs to drop, it needs to fall. I have this in my holdings, my personal holdings. Let me pull it up real quick. Yeah, I have in my personal holdings a small portion, but I have it, and pretty much, since I bought some, it has returned about 12.84%. So I don't know where the disconnect is with my discount cash flow model and the financials of BP, or what. I could just be seeing the success of this giant bull market we were in. But that's my take on BP. BP needs to get their financials under control. But let's do the gut check. So 1, 2, 3, 4, 5, 6, 7. They have of a 7. So 53.85. And that was 6, 27 at 12:40 a.m. Bring this up down. Actually, you know what? This and this needs to come down. That did not work. Why did not work? BP. So, BP does move a lot with the market. And if this market constantly, that's not English, constantly is falling, BP will constantly fall. So, yeah, I don't know. But take care, investors. And I'm back. I'm back making videos. I was battling COVID. But I think I just have a cough now. If you hear me mute my mic every once in a while, it's because I'm coughing. But I'll see you later.